Welcome back to Today Assets Report, the channel where we cut through the noise and give you the real picture of what's happening in global finance. I'm your host, and today we are covering three of the most explosive developments in the crypto and financial world right now. XRP spotted at $2,140 on a live exchange, President Trump pushing to end crypto taxes, and the growing reality that SWIFT simply cannot survive without Ripple. If you've been watching this space, you already know something big is building. If you're just tuning in, buckle up because what we're about to break down today is going to change the way you look at money, banking, and the future of global finance entirely. Make sure you're subscribed to Today Assets Report so you never miss a report like this one, because the moments we're living through right now are the kind that people look back on and say, I wish I had been paying attention. Let's start with what everyone is talking about. XRP was spotted at $2,140 on a live exchange. Now, the mainstream reaction was immediate. People called it a glitch. They called it a data error. They called it a malfunction. But here's the thing. In institutional finance, there are no random glitches. Systems that handle billions of dollars in transactions every single day do not just accidentally display numbers 500 times higher than the current market price. That's not how these platforms work. So the real question isn't whether the number appeared. We know it did. The real question is what that number actually represents. And when you start asking that question seriously, the answer becomes something a lot more interesting than a simple technical error on a screen. Here's the context that most people are completely missing. When banks and financial institutions test their internal systems for large-scale settlement, they don't test with today's retail price. They test with the price that would be required to actually move the value they need to move. Think about it this way. If a single transaction needs to settle tens of billions of dollars worth of assets in real time, the bridge asset handling that settlement needs to carry enough value to make it work mathematically. That's not speculation. That's basic financial infrastructure logic. David Schwartz, one of the chief architects of the XRP Ledger, has said it himself. There cannot be two prices for XRP indefinitely. The retail price and the settlement price have to converge at some point, and when they do, that convergence is going to be one of the most dramatic repricing events in the history of financial assets. Now let's talk about what President Trump is doing with crypto taxes, because this is a policy shift that the mainstream financial media has badly underreported. Right now, every single time you spend crypto, whether you're buying a coffee, paying for a service, or sending money to a friend, it is a taxable event. That means you have to track the cost basis, report the gain or loss, and file it accordingly. It is an absolute nightmare for everyday transactions, and it has been one of the single biggest barriers keeping crypto from becoming a true payment network in the real world. The Trump administration is now officially pushing for a de minimis exemption that would eliminate that tax burden on small, everyday crypto transactions. This is not a rumor. This is not speculation. This is active White House policy being pushed right now. Think about what that change actually means in practice. The moment that everyday crypto payments are tax-free, the last major friction point standing between crypto and mainstream adoption disappears. You no longer need Visa. You no longer need MasterCard converting your crypto into dollars behind the scenes. You can send value directly from your wallet to a merchant's wallet instantly, with no middleman taking a cut, no conversion fee, and no taxable event triggering in the background. That is the death of the financial middleman as we have always known it. And XRP, with its 3 to 5 second settlement time and fraction of a cent transaction cost, is the asset that was architecturally designed from day one to be exactly that kind of payment and settlement layer at global scale. Now let's address the SWIFT situation, because this is where things get really important and where a lot of investors are still confused. The world has been cheering the rollout of ISO 2022, the new global financial messaging standard that Citibank and other major institutions are migrating to through SWIFT. And yes, ISO 2022 is a genuine upgrade. It carries richer data, it's more structured, it's more efficient. But here is the clinical truth that most people are not talking about. ISO 2022 fixes the messaging. It does absolutely nothing to fix the actual settlement. SWIFT is still at its core a system of promises. Banks still have to hold Nostro and Vostro accounts, pre-funded pools of capital sitting idle in foreign currencies around the world just to make cross-border payments work. That capital is trapped. That capital is inefficient. And that problem does not go away just because the message format got an upgrade. Ripple solves the problem that Swift cannot. Ripple combines both the messaging and the actual settlement into a single, seamless protocol. When a bank uses Ripple's on-demand liquidity solution, they are not sending a message and hoping the money shows up in 2 to 3 business days. They are settling the transaction in real time, using XRP as the bridge currency with full finality in seconds. That is a fundamentally different architecture. Swift tells you the money is coming. Ripple delivers the money. And when you frame it that way, it becomes very clear why more and more banks and financial institutions are looking at Ripple not as a competitor to Swift, but as the infrastructure that replaces the part of Swift that was always broken. Lee's talk about Ripple's move toward becoming a federally chartered bank, because this is the development that changes everything about how institutions can legally interact with XRP. Crypto.com recently received conditional approval from the OCC for a national trust bank charter. Ripple is aggressively pursuing the exact same path, including access to a Federal Reserve master account. And here is why that matters enormously. The moment Ripple operates as a federally regulated financial institution, it stops being a crypto company in the eyes of the law. It becomes a bank. It becomes a regulated counterparty that JP Morgan, Goldman Sachs, and every major central bank in the world can legally, directly, and without friction do business with. That is not an incremental upgrade. That is a complete transformation of Ripple's legal and institutional standing in the global financial system. And once that transformation is complete, XRP moves from being a speculative digital asset to being the native settlement currency of a bank-grade financial infrastructure. We're not talking about retail speculation anymore. We're talking about an asset that sits at the center of trillions of dollars in cross-border settlement flows, operating inside a fully regulated framework with institutional players who have legal clarity to use it without hesitation. The smart money has always understood this trajectory. The question has always just been timing. And right now, between the bank charter pursuit, the tax policy shift, and the ISO 2022 migration, the timing signals are stacking up in a way we have never seen before all at once. Lee's also talk about something that most XRP holders haven't fully priced into their thinking yet, and that is the machine-to-machine economy. We are entering an era of artificial intelligence agents, autonomous systems, and robotics that operate continuously, 24 hours a day, 7 days a week, without breaks, without human intervention, and without the ability to wait 3 days for a swift settlement to clear. These AI systems are going to need to transact with each other in microseconds. They are going to handle micropayments, service fees, data purchases, and resource allocations at a speed and scale that no legacy payment system was ever designed to accommodate. Credit cards don't work for machine payments. Wire transfers don't work for machine payments. But XRP, with instant settlement and near-zero fees, was built for exactly this kind of high-frequency, low-latency value transfer. The tokenization wave is the other massive force that is converging on this moment in time. We're talking about trillions of dollars worth of real-world assets, government bonds, real estate, commodities, private equity, global debt, all being brought onto blockchain rails this year and in the years ahead. Forecasts are placing the total real-world asset tokenization market at nearly $19 trillion. That is an almost incomprehensible amount of value that needs to move, settle, and be transferred across borders, across time zones, and across institutions in real time. And the asset that has been positioned, technically and through regulatory relationships, to be the liquidity bridge for that movement is XRP, not Bitcoin, not Ethereum. XRP, the one built specifically for institutional settlement from the very beginning. Let's not ignore the macro picture either, because what's happening in traditional banking is feeding directly into this thesis. We are watching a slow-motion liquidity crisis building in the legacy banking system. Mortgage rates are still elevated, the housing market is under pressure, and smaller banks are continuing to consolidate into larger ones. The pattern of regional bank stress that we saw in 2023 did not disappear, it evolved. And what you end up with in a consolidation environment is a world where a small number of super banks control an increasingly large share of the global financial system. That concentration creates bottlenecks, it creates points of failure, and it creates an urgent need for an alternative settlement infrastructure that doesn't depend on a handful of institutions to function. On-demand liquidity is exactly that alternative. Now, speaking of market sentiment, let's acknowledge what's happening in the broader environment because the fear is real and it's loud. The Hindenburg Omen has triggered in legacy equity markets. Bitcoin has seen over $750 million in sell pressure from wallets that have been dormant since the Satoshi era. 15-year-old whale wallets moving that kind of volume is not a random event. Those wallets represent people who have been in this space since the absolute beginning, and they are repositioning. They are not running from crypto entirely. They are rotating. And historically, that kind of rotation out of store of value assets and into utility assets signals a shift in market narrative that eventually gets reflected in price in a very dramatic way. Here's the perspective that separates the investors who win in moments like this from those who don't. Retail investors watch the price. Institutional investors watch the infrastructure. Right now, while retail is focused on whether XRP is up or down on the day, institutions are watching Ripple secure bank charters, watching the White House remove tax friction from crypto transactions, watching ISO 2022 go live and expose exactly what SWIFT still can't do, and watching the tokenization market prepare to go from billions to trillions. They are not distracted by short-term volatility because they understand what the long-term architecture looks like. The infrastructure being built right now is not being built for a crypto experiment. It is being built for the next global financial system. So here is where we land on Today Assets Report. The XRP price spotted at $2,140 on a live exchange is not something to laugh off or dismiss. Whether it represents a settlement test, a liquidity model, or a glimpse at an internal pricing mechanism, it tells you that the institutions building on this technology are not planning for XRP to stay where it is today. The Trump administration's push to end crypto transaction taxes removes the last major real-world adoption barrier. And Ripple's relentless march toward becoming a federally chartered bank is the move that cements XRP's role not as a speculative token, but as the foundational asset of a new financial era. Stay informed, stay patient, stay positioned. This is Today Assets Report, and we will see you in the next one.